This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on July the 16th, 2015. Our time is 9:14 Mountain. Remember, if you ever miss a radio show, we have a podcast. The podcast is through iTunes. Type in the World Financial Report on Radio. You will find us there. And we go on your portable device anywhere you do. The shows are streaming as well, archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. You can find Harold at rarecoloreddiamonds.com. The telephone number to speak personally and privately with Harold about investing in hard assets, 1-800-432-1022. Our featured diamond of the week from rarecoloreddiamonds.com, and I love green diamonds. It's a .53 carat princess cut fancy intense yellow green diamond. Take a look at our featured diamond of the week, rarecoloreddiamonds.com. Click on featured diamond. As we tape today's show, last night, Greece, the parliament did give a yes, an okay, to the austerity plan that they needed to put in place prior to the EU working out a bailout. But really what they're doing, adding debt on debt. Will Greece ever be able to pay it off? Probably not. Also, big investors are holding the highest amount of cash since the Lehman collapse. That says a lot. The governor of Puerto Rico says public debt of $72 billion, not repayable. The island workforce participation rate is at 40%. The unemployment rate, 13%. We're going to talk about this story later in the show, but it is a big one. The United States is facing a $1 trillion pension shortfall. You heard right, $1 trillion. Also, the CBO says the United States, their debt is heading to 103% of GDP. Here in Canada during the week, the Bank of Canada cut interest rates a quarter point to 0.5, and that is the second cut this week. We saw the loonie go down as was predicted by Harold. Venezuela's currency is sinking to an all-time low. In fact, it's hard to believe, but their biggest bill is worth 16 U.S. pennies. That is due to, obviously, inflation and the currency devaluation. One of the stories we'll talk about later in the show, too, is the U.S. Mint has suspended sales of U.S. Silver Eagles due to high demand. A lot of people can't make heads nor tails out of that situation. Here you have high demand, and yet the price is going down. Two quotes before we get to Harold, very important to keep in mind. John Ng says, with regard to gold, people tend to forget that during the Greek crisis, gold prices in euros were up 10%. In fact, gold priced in euros has gone up 17% year to date. So gold has acted as a tremendous safe haven for Europeans during a time of crisis. Gold has been struggling a bit in dollar terms, but as the debt problems in the United States come home to roost, we will eventually see much higher prices for gold quoted in U.S. dollars. Also, you will notice that the price of gold has not hit new lows yet, and the reason for that is because the physical offtake in countries such as China and Switzerland continues unabated. This is probably one of the most important quotes you'll read and hear all year long. You can find it in our newsletter. It's quite scary. I think what we're seeing around the world, and Greece is really the leader, we have a debt crisis on our hands for many countries all around the world. John Embry said this week, the socialist government continues to run significant deficits. The net debt in one of Canada's poorer provinces now exceeds $20 billion, and there are less than 1.3 million people in the province to service it. If you do the math, the province is clearly headed for disaster. And this is just a microcosm of what's going on globally. The world is drowning in debt, and the implications of this are obvious. We are either going to experience a debt deflation-driven depression that will dwarf anything previously seen, or we will experience the complete destruction of the current system and some form of hyperinflation. This is inevitable, and I think people should be extremely careful these days with their debt exposure and should be focused on owning real things. And Harold, that's what we advocate, owning real things. If you look what's happening in Greece, Puerto Rico, when we talk about this pension story after your commentary, it'll really open up people's eyes to what's happening in the United States with their debt problems. Harold, the world is awash in debt, and we believe one way to save yourself, hard assets.
I don't think it's been any more obvious than that, Randy. I've never, ever seen situations like this where markets are being manipulated just for the sake of the government type of thing. And it's obvious with what's happening in China, which we'll touch on in a few minutes. But with all these things going on, with the Greek crisis, with everything happening in Europe, with the stock market in China plummeting, and all the news that's coming out, most would think that gold would be rising. But they're wrong. And the fact is that it's a manipulated market. We've known that for a long, long time. We know that the banks are manipulating gold, and there's a direct correlation between gold and the U.S. dollar. So the reason that gold is going down right now is the basics of the gold, the relationship with gold and the dollar. The U.S. dollar right now is extremely strong. It's over 97 cents. It's going to approach the par level very soon. It's tried to break it 3 times already, and there are buy orders right above the par level on the U.S. dollar. That means that once the U.S. dollar breaks that par level, it's all these buy orders get filled and the market rises. So I'm looking for a very large increase in the price of the U.S. dollar as other foreign currency markets falls. Now, it's not that things are great all of a sudden in the United States. All it basically means at this particular point are things are better in the United States than they are in other parts of the world. And obviously with what's happening in Greece and China and all throughout Europe, there's serious problems there. There's serious problems in the United States. However, the United States has the biggest economy in the world, and they can print untold amounts of money. So at this particular point, again, for the last several months, I know it has not been a popular call, but it's been the right call. The U.S. dollar is strengthening, and that's going to push gold further down. So at this particular point, this is what's happened so far. Over today, gold is down $5.30. Over the last 30 days, gold is down $38. Over the last 1 year, gold is down $156.20 or 12% on the year. And silver has followed suit. So it's not that we are no longer bullish on these markets. We certainly are. I still own all of my gold and all of my silver, and I won't sell it because gold and silver are not something that we're trading. Gold and silver is something that we're holding as a hedge against all things that are going to go bad moving forward. Now, again, if you own your precious metals or you own your assets outright, you're not going to have a major problem. You're not going to have margin calls like they just did in China. You're going to be able to hold gold and silver and hard assets for the right reason, because eventually there's going to be, the markets are going to react the way that they're supposed to react. When Randy brought up at the beginning of the show that coin sales for silver coin sales, there's shortages. They've had to halt actual sales of from the Canadian and from the U.S. Mint on shortages. Do you realize that in a real market situation that is not possible? It is not possible for there to be a shortage of a commodity and for the prices to go down, especially when the demand is so high. So if the demand is so high to buy these silver coins from the mints, and they can't mint them anymore because there's no available silver to purchase, how in the world is it possible for the prices to be going down? I'll tell you exactly how it's possible. Because banks like J.P. Morgan are allowed, under different rules than everybody else has, to be able to trade the market on the downside. Now, the thing that J.P. Morgan and other banks are doing is they're shorting the market. Right now, there's the largest short position in the silver market and in the gold market probably in history. Right now, the markets are short about 200,000 200,000 contracts of silver. So we're looking at a massive, massive short position in silver at a time when there's hardly any physical silver available for mintage of coins. So again, that's in a real world, that's an impossible situation. But we're not in a real world right now. We're in a manipulated world, just like we saw in China, where their market plummeted, and all of a sudden the Chinese government stepped in, halted trading, and then after they halted trading, they actually went back into the market and purchased back a lot of the stocks that were plummeting. So basically what they did is they stopped the hedge funds from selling, which is totally illegal, and then on top of that, they went in and bought the market back themselves. That's not reflective of the Chinese economy. That's not reflective of anything about except for total manipulation. And that's what's happening in the markets all around. That's why I don't trade stocks. That's why I don't trade commodities. That's why we buy and hold our assets, because eventually the markets have got to straighten out. And there's no doubt in my mind that they will. But over the short term, here's what is going to happen. We are going to see a continued increase in the price of the U.S. dollar. The U.S. dollar will continue to rally, and once it breaks par, I anticipate that the U.S. dollar is going to go to the 105 to 106 level. That's probably or very close to the highest price that the U.S. dollar has ever hit. Now, when the U.S. dollar breaks par and all these buy orders get filled, and then the price of the dollar goes to 105, 106, that'll push gold to the price that I've been mentioning for the last several months, which is $1,000. That's where I'm convinced that the price of gold is going to bottom out. Now, as we're speaking today, gold is down 530. It's been as low as 140.90. So we've broken support at 150. The next major level of support for gold is at 1125, which we'll probably hit next week. 1100 is major support, but 1000 is extremely strong support. And I do believe that as the U.S. dollar continues to strengthen against other currency markets, especially the Canadian dollar at this point, it's going to push gold lower, and then we're going to be able to buy gold at a phenomenal price in the very foreseeable near future. In actual fact, it could happen by the end of this year. You've got the silver market down 8 cents. We've traded as low as 14.81. 14.80 is support for silver, then 14.50, then 14.25. Ultimately, if gold does go to 1,000, I anticipate that the price of silver will bottom out at around the 12.50 level. If you own gold or silver, or if you're trading in gold and silver and you're leveraging it, you're going to get hurt. There's no doubt about that. So the fact is that I've always recommended to you not to leverage anything. And the best result is that you could be in the strongest market, but there's going to be corrections, and those corrections can be severe from time to time. And if you're margined and heavily leveraged, you could be triggered a margin call, and that is going to force you to either put in more money or liquidate your position. And that's what's happening in China. Again, the Chinese stock market is a wreck. And people that are in the market lost 30% of their net worth in less than 30 days. In actual fact, it happened in 2 weeks. So now what's happening? Nobody really trusts the Chinese stock market. You'd be a fool to be investing in that market at this particular point, realizing what they're doing with that market and how they're manipulating it and how they're stopping selling and then buying back their stocks. But also think about this. We also know that the Chinese investors, over the last few years, the Chinese government has made it possible and allowable for Chinese citizens to be able to buy gold and silver. So just think about this. They were able to buy gold and silver a few years ago. They were never allowed to do that before. And now they're allowed to trade stocks. In fact, the Chinese government wants them to trade stocks. So they don't have experience trading stocks. They go into the market. They see the market running like crazy. They think that this is easy money, and they go in and they leverage their positions. That means that maybe they're buying 100,000 wands of stock by only putting up 10,000 wands of money. If the market's going your way, that's great. You're going to make a ton of money. But when the market starts to go against you and drops 30% in 16 days, you got some serious problems, and that's exactly what happened. These investors that were very inexperienced and heavily margined and greedy lost all their money. Now where are they going to get the money to make their margin calls? Aha, I've got physical gold and silver. So my feeling is, and I believe others that know this market fairly well, is that you'll start to see that these Chinese investors are going to be forced to sell their gold and silver, which again is another reason why I feel that the gold market is going to drop to around 1,000. Now, if gold does drop to 1,000, it does not mean that we're in a bearish stance in gold. All it means that it's been manipulated down to that level. Don't forget, when we first started buying gold, it was at $250. At $1,000, we're still up 400% on our position if you bought it outright and held that and never leveraged it at all. So again, even though for the short term, I see the price of gold and silver dropping for the reasons that I gave you, a strong U.S. dollar, sales because of margin calls in China, and just overall fact that the relationship between gold and silver, the market has got to drop between the U.S. dollar. I think we're going to see gold at the levels that we anticipated. The other thing is that the Canadian dollar will continue to fall, as much as I hate to say so. Right now, if you went to the United States, it would take you 1,300 Canadian dollars to buy 1,000 American dollars. That's the easiest way to let you know that the Canadian dollar is down by 30%. I anticipate that the Canadian dollar is going to go down to, believe it or not, and I hate to shock anybody, but 60 to 65 cents. So I still believe that there's heavy downward movement in the price of the Canadian dollar, and the reason that I believe that is what's happening with oil. As there is a direct correlation between the U.S. dollar and gold, the stronger the U.S. dollar, the weaker gold is. It's a similar situation with oil and the Canadian dollar because, let's face it, Canada's economy is based on commodities and oil. So as oil prices have almost stabilized at around the $50-52 level, I think that the price of oil is getting ready for another big drop. And the reason I'm saying that is that if this deal goes through with Iran, where Iran's going to be is going to be good now, which nobody believes, by the way, but President Obama wants this to happen. He will veto anybody that's trying to fight against it. And if they do make a deal with Iran, which it looks like they're going to, what that means is that the U.S. is going to lift the sanctions against Iran. One of the biggest sanctions was they couldn't sell oil. Now they're going to be able to sell oil again. And what do you think Iran is going to do? They need money desperately. They're billions and billions and billions in debt. They're going to start to produce as much oil as they can, and they don't care about the price. That's going to push down the price of oil, and I think that oil's coming back down to the $35-40 level, which is why I believe the Canadian dollar is going to drop to the 60 to 65 cent level. So again, this may not be what you want to hear, but it is what you want to hear. You want to know what's going to happen so you can plan for it in advance. If you're going to go on a vacation, you want to know what's going to happen with your currencies when you have to change it to another currency. When you're making financial plans or making financial investments, you need to know the difference between Canadian and American dollars at this point because, again, there's a very important relationship between the two. Obviously, we're trading partners. I'm shocked, to be honest with you, that the Canadian government has allowed their dollar to fall as much as it has, especially against an important trading partner like the United States. But it also is killing the United States as far as Canadians coming to the United States on vacation. They're losing 30%. Canadians are losing 30% on their money right now. And if I'm correct on the currency trade, we're going to be losing 40%. And that's a massive big deal. So this is what I see happening in the markets right now, Randy. It's a time to be extremely cautious, not to be trading stocks, that's for sure. The stock market could plummet any day just based on what's happening all around the world. The currency markets are extremely important. If you don't understand currencies, again, please call me. You know, we've been saying that you can call the office. I'll speak to any of the listeners or clients that want to know what's going on because it's so vital that you understand what your next moves are going to be. Last week alone, I had over 30 people from the radio show call for advice on the market. So please, you're not bothering me in any way, shape, or form. I'm sitting here in Colorado. I'm looking to do business and help my clients, but the fact is you need to know what's going on so you can make an intelligent and informed decision. So again, Randy, this is what I see what's going on at this particular point.
Speak personally and privately with Harold about the financial markets, geopolitical world. 1-800-432-1022. 1-800-432-1022. Our featured diamond of the week from rarecoloreddiamonds.com is a .53 carat princess cut fancy, intense yellow-green diamond. Speak with Harold about investing in this diamond. Connect with him, rarecoloreddiamonds.com, featured Diamond of the Week, or call 1-800-432-1022. Get our free weekly newsletter. Speak with Harold about getting your name on the list. We'll send out our info to you via email free of charge every week. And I should mention, you can go through it in 5 minutes on any portable device, and you can spend hours too if you would prefer. But the stories you want to read this week: the United States is facing a $1 trillion pension shortfall. You think there are problems in Greece? For many former state workers, a monthly pension is obviously a check in the mail, is their bread and butter in retirement. But the gap between what states have promised retirees and how much is saved to fund those payments has grown, according to a new report from Pew Charitable Trust. States are short $968 billion for their pension systems, an increase of $54 billion over the year before. When debts from local programs are taken into account, the total shortfall tops $1 trillion, according to the report, and we have a link to it in our free weekly newsletter if you'd like to read it. 3 states, Illinois, Kentucky, and Connecticut, have less than half of the pension programs funded. Illinois is in the hole by more than $100 billion. On the last show, I said, Illinois, in my opinion, is bankrupt. A lot of people probably thought, you're crazy. You look at the numbers, you look at the math, they're bankrupt. There are 2 big reasons states have fallen behind. First, a lot of funds are held in stocks, and returns on those investments fell during the Great Recession. And second, some states have failed to make required contributions to pension programs. To give you an idea, there was a story out this week, the Los Angeles Times had it, CalPERS, which is the California State Pension Plan. They need to make a return of 7.5% to stay solvent. This year, they made 2.4%. That's right, 2.4%. They needed to make 7.5%. So at that point, you're in a situation where you're not going to make your numbers. The money will not be there for the retirees at some point because you're not getting the rate of return that you promised. Definitely take a look at this story. It's in our free weekly newsletter. Get our newsletter from Harold. Speak with him about investing in hard assets, diamonds, gold, silver, 1-800-432-1022, or go to Harold's website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. We're going to come back and talk about diamonds in detail as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on July the 16th, 2015. Our time is 9:39 Mountain. Connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. Our radio show has a podcast through iTunes. Type in The World Financial Report on Radio. You can subscribe to our podcast. We go on any portable device you have wherever you travel. And don't forget, the shows are streaming live, archived on Harold's 2 websites, HESradio.com and rarecoloreddiamonds.com. We have a companion to our radio show. It's our free weekly newsletter, the World Financial Report on Radio. If you would like to receive it, connect with Harold, rarecoloreddiamonds.com, or call 1-800-432-1022. Featured Diamond of the Week. It's a .53 carat Princess Cut fancy intense yellow-green diamond. It is absolutely stunning, a museum piece. You can see it at rarecoloreddiamonds.com. Click on Featured Diamond of the Week. You can see the video of the diamond there. And Harold, I have an affinity for green diamonds. I love them. And you add in the yellow-green diamond. It is just amazing. A great investment piece.
It's a very, very rare color. The thing is that diamonds turn colors because minerals enter the ground and turn them colors. With blue diamonds, it's boron. With yellow diamonds, it's nitrogen. Will turn a diamond yellow or orange. They don't know what turns a diamond pink or red. They believe it's the inclusions and the way the molecules react to it. But as far as a green diamond goes, a green diamond turns green primarily because of radiation, because of uranium, actually. So it's very, very, very rare. In fact, green diamonds are amongst the rarest diamonds ever, and they're treated totally differently than any other diamond when it comes to grading them from the Gemological Institute of America. So basically, when a diamond comes out of the ground, it's a rough diamond. It's obviously not cut and polished. So what happens is that when a diamond comes out of the ground and they've mined that diamond, it's sold to a cutter who will cut and polish that diamond. And then what happens, once the diamond is cut and polished, they send it to New York to the Gemological Institute of America, known as GIA, and they grade that diamond based on its color and its clarity and its carat weight and all that type of thing. But as far as a green diamond goes, they're so rare, and when they come out of the ground as a rough diamond, it actually doesn't look green. It's got a black film on it. So for many, many years, when people didn't know an awful lot about colored diamonds, the miners thought that they were black diamonds, and black diamonds are not very valuable, maybe a few $100s a carat, and that's what they sold them for. It's only when they found out that when you peeled the skin off of this particular diamond that it was green. So instead of being worth $200 or $300 a carat, it was $200,000 or $300,000 a carat. In some cases, in the millions of dollars. So the way that the Gemological Institute of America (GIA) insists that green diamonds are actually graded, they have to go through a process. First of all, as a rough diamond, the owner of that diamond must take it to GIA so the GIA can see it in its natural form and confirm that this was the diamond. Then what they do is it'll go back to the cutter, and he'll start cutting and polishing this diamond. But it's got to go back to GIA at least 2 or 3 times during that cutting and polishing process in order for GIA to determine that it's a natural colored green diamond. And it's the only diamonds that they do this with. So otherwise, if they don't go through this process, GIA will give the grading as undeterminable, and the diamond could be worth $1 million, but if it comes back as the color undeterminable, it's not worth hardly anything. That's how important it is to understand green diamonds and other diamonds and understand the process. So you never ever buy a diamond that is not graded by the Gemological Institute of America. In fact, most people, when it comes to diamonds, are not familiar with how diamonds work. But diamonds, once they come out of the ground, again, the owner of that diamond will give it to a cutter who is going to cut the diamond to be the best diamond it could possibly be. Once that diamond is cut and polished, then it's sent back to New York to GIA, and GIA will do a full grading report on that diamond. So when you buy a diamond, you get a full grading report. It tells you everything you need to know about the diamond except for the value of it. In that case, we have independent appraisers that will appraise that diamond for you, so you basically know what the replacement value would be on that diamond, and you'd have all the pertinent information for resale. That's the same with any diamond. You never ever buy a diamond that is not graded by GIA. If you do, the chances are you will never ever sell that diamond because nobody will have an indication as to what that diamond really is. So this diamond that is up for sale this week is spectacular because of the color of it. It's an extremely rare color, and on top of that, it's my favorite cut. It's a princess cut, which is one of the rarest cuts that you could possibly get. Very seldom will you ever see a diamond cut in a princess cut. It's much easier to cut it in a radiant cut than it is to cut the sharp corners on a princess cut. So the thing is, it's a 53 pointer. It's over a half a carat. It's a princess cut, which is an extremely rare cut. And the color is fancy, intense yellow-green. Not yellowish green, but yellow-green means that it's got 2 primary colors. And when you see this diamond in person, or if you see it on our website, just look at the video of it. It will take your breath away. It's one of the most beautiful colored diamonds you'll ever see, and a phenomenal example of an investment quality diamond. Now, as we were talking about at the beginning part of the show, markets are easily manipulated. The stock markets are manipulated. The currency markets are manipulated. The oil market is manipulated. But one market that cannot be manipulated in that sense is the diamond market. It's a very, very tiny market, and it's very, very much controlled by the major miners, which are De Beers and Alarosa and Rio Tinto. And Rio Tinto, by the way, owns the Argyle mine, and the Argyle pink diamonds are the most famous diamonds in the world right now. So the Argyle tender is going on at this particular point. That means that the Argyle mine in Western Australia, the East Kimberley district of Western Australia, is where the Argyle mine is located. It's the oldest producing diamond mine in the world, producing 30 million carats of diamonds a year. Most of those are low-grade industrial white diamonds that are used to cut other diamonds in diamond bits and drills, that type of thing. But out of this mine comes the world's supply of pink diamonds. It's a tiny number. It wouldn't even fill the palm of your hand. That's how small the pink diamond market is. But what Argyle does every year, it takes its top 55 to 65 diamonds. In this year, it's about 44 carats of diamonds, and they take them on tour to 6 different cities around the world. And they take them to these 6 cities, and they show these amazing pink diamonds that start at about a half a carat and go to around just slightly over a carat. So again, these are not the biggest diamonds in the world, but for pink diamonds, they're actually considered huge, because 95% of pink diamonds are under a quarter carat. So to get a diamond over a quarter carat that's an Argyle pink is something very rare. If you get something that's around a half a carat, you've got something ridiculously rare and definitely worth hoarding. So now what they've done is they've taken these 65 diamonds, and they're going to take them to 6 different cities around the world where we, high-end dealers, get to look at these diamonds. And this year they're going to have viewings in Sydney, Hong Kong, New York, Perth. So they're going to be showing these amazing diamonds. And as high-end dealers, we get to sit down in a private room, view these diamonds, and then the ones that we like, you get to make one bid. It's a closed bid. So you bid on this diamond, and you sit back and hope that you know enough about those diamonds in order for you to win that diamond at a good price. The problem is, for the last couple of years, the general public is now aware of what's happening with Argyle. They know that the mine is about to close. The mine that produces 95% of all the pink diamonds in the world is going to close in 4 years. That means within 5, 6, 7 years from now, the price of these pink Argyle diamonds will absolutely skyrocket in price. They're already starting to do that. The closer we get to the mine closing, the more and more these diamonds go up in value. The ones that are the best color and the highest saturation of color can go up 1,000%. The ones that are not vivid in color but may be intense, they could go up 500 to 800%. The fancy pinks, similar. So this is a one-time opportunity. We'll never, ever get a chance to do this again, to actually invest in a diamond that will soon be extinct. There will not be any more pink diamonds because the Argyle mine produces, like I say, 95% of them. It's one of the best investments you could possibly make. You own the diamond outright. We ship the diamond directly to you. You own it. You put it into either a beautiful ring that will do that for you, which can increase the value of the diamond. And then on top of that, we also own the secondary market that resells diamonds. We built a company called H Siegel Fine Auctions. It's a live virtual auction site, the only one that exists in the world today. And the reason that I built that was because how can a diamond be a great investment if you can't resell it? So we've built this auction site, and it's just a few years old. Many of my clients, nobody's selling their diamonds till at least 5, 6, 7 years, especially if there's pinks, because again, what is the point of investing in a pink diamond if you're not going to wait until the mine closes down? That's where the shortages are going to come from. So again, own an Argyle pink diamond. Number one, they're not for everybody. They're pricey. the minimum investment for an Argyle pink is 40 to 50,000. So a lot of people don't fall into that price category. However, a $100,000 pink today could be a $500,000 pink in 5 or 6 years from now. There's no other market in existence that will do what a pink diamond from the Argyle mine will do. And again, it's a very, very important asset and a very important time to invest in these amazing assets. Yellow flawless diamonds also, they increase by 15% a year. You don't have to put your money in a very risky stock market in order to be able to retire comfortably. Put a diamond away for 10 or 15 years, you'll see a much bigger return than you ever will with the stock market. So, again, Randy, this is the most exciting time of the year for diamonds because the Argyle tender is going on. And why don't you enlighten us as to some of the stars that are going to be coming out of this Argyle tender?
That's right, Harold. There is a collection, and it includes 5 hero diamonds, which have been individually named, inspired by the world of ballet, in recognition of Argyle's partnership with the Australian Ballet. But one thing to keep in mind, and we've seen this quite a few times, diamonds may have a name, but if you invest in that diamond, you can change the name. So keep that in mind. There's the Argyle Prima, and it's a 1.20 carat fancy red pear-shaped diamond. Pear-shaped diamonds are absolutely beautiful to cut. Coveted for its unique combination of size, shape, color, and clarity, which is rarely seen in the rarefied, fancy-colored diamond world. So the Argyle Prima, a 1.20, and as Harold was saying, that is a big, big diamond from the Argyle. Also, there's the Argyle Aurora. It's a 1.47 carat, fancy red oval-shaped diamond named in the honor of Princess Aurora from the movie and actually even the ballet, The Sleeping Beauty. The Argyle Allegro, and this is a 0.79 carat fancy red radiant-shaped diamond named after the brisk and lively ballet movement and reminiscent of the red-colored dancing within this diamond. It's absolutely gorgeous. There's the Argyle Spectre. It's a 1.93 carat fancy vivid purplish pink shield-shaped diamond, and shield shapes are just absolutely gorgeous. Think of Superman. The vibrant pink color and shape and strong shape of this diamond is inspired by the ballet Le Spectre de la Rose. And finally, the Argyle Aleve, and it's a 1.44 carat fancy intense pink emerald-shaped diamond inspired by the ballet movement of rising high without bending and reflecting the perfect long lines and the elegance of the emerald shape. And as Harold was saying, the Argyle Pink Tender in Sydney, Hong Kong, New York, and Perth bids close October 21st. But Harold, we've seen this many times before where a diamond will have a name. You'll see a very major collector come in at auction at Christie's, Sotheby's, make an investment in that diamond, and because it's now theirs in their collection, they will change the name. Or sometimes it does not have a name, so it's given a name. So people don't have to, just as a rule of thumb, if a diamond does have a name, Harold, there's nothing wrong with changing it. You can make it your own.
You better believe you can. In fact, I gave my wife a very, very rare yellow diamond. It was a 14 karat, but it's flawless and it's got history and it's extremely rare. And I gave it to her as a gift. By the way, it's tripled in the last 7 years. It was a diamond that Harry Winston wanted to buy, but I promised it to my wife, and he made her the setting. He made the setting, which was $40,000 for this diamond ring, just so he could put a picture of the diamond in his book of famous diamonds. So when I gave this ring to my wife, and I told her that she could name it, she says, well, I want to call it the Harriet diamond. So I look at her and go, I could never, ever resell that diamond if it was called the Harriet diamond. So it's such a massive diamond. It's oval, it's flawless, it's magnificent, it's canary in color. So everybody who sees it goes, oh, my God. So we called it the OMG diamond, and that's what we named it. By the way, of all the 5 diamonds that Randy just pointed out to you with, where most would think that the 120 fancy red pear-shaped would be the most expensive diamond because red diamonds are so ridiculously rare. They're the rarest diamonds on Earth. But to show you how things are changing with pink diamonds in the Argyle mine, the most expensive diamond, in my opinion, and the one that will sell for the most, is the Spectre. It's a 1.93 carat fancy, vivid purplish pink, so it's got the highest color of saturation. And being that it's a shield, very seldom will you ever see a shield. It's literally, Randy's right, it's in the shape of Superman's cape. So because it's a fancy, vivid purplish pink and it's almost 2 carats, my feeling is that diamond will sell for over $4 million, almost $2 million a carat. When the mine closes and hold on to that diamond for 10 years, you're probably talking about a diamond that will sell for somewhere in the range of $7 or $8 million. That's how much these diamonds are going to go up in value. It's a one-time opportunity because the fact is there will never be another mine in existence that will do what the Argyle mine does, which is produce 95% of any color diamond, let alone important diamonds like pinks. And then this mine is only going to close down in 2020. It's only 4.5 years from now. That means you know, if you put your money into an Argyle pink diamond and put it away for 10 years, you're talking about probably the biggest return on investment that you'll see. And there's no risk to these. They never, ever fall in price. They never have. The closer we get to the mine closing, the more and more these diamonds go up in value. I do have Argyle pink diamonds on my website. I have them put away for clients who want to see them privately. I bought one in 2003 at the Argyle tender. It was a 2-carat fancy vivid purplish pink, bigger than any diamond that's come out of the Argyle mine in years. Back then, I paid $350,000 for it. That diamond's worth close to $4 million today. That's how much these diamonds go up in value. You don't buy diamonds and look to sell them in a year or 2 or 5 years. That's the wrong investment for you. The longer you hold them, the more they go up in value. 50 years ago, you could have bought a 5-carat pink diamond for $50,000. Today, if you could ever get one, they're $5 million plus. Only reason I know that, one of our friends owns one. I own several pink diamonds put away for the future, but again, I'm in the business of making clients money. That's my job here. That's what I do for a living. So I could definitely hoard all of these diamonds, but that's not what we do for a living. We actually want our clients to do extremely well in the market with us, and we only make money when you make money. When you go to sell your diamond through 8 Siegel Fine Auctions, we get 10% of the profit only. You get all of the rest. So again, if you don't make money, we're not making any money, and we're in the business of making money for our clients and for ourselves. This is a tremendous opportunity to own Argyle pinks. There's very few that are still available, and brown is now starting to seep into the mine. So you want to buy the fancy pinks, the fancy intense, the fancy vivids, whatever you can afford. Put these away for your future. You'll make more money on these diamonds than you will on almost any investment you will ever make. And again, the time is now to do it. The Argyle tender is going on right now.
We have a .53 carat princess cut fancy intense yellow green diamond. It's our featured diamond of the week. It would be great for a person to invest in if you were going to look to add to a portfolio. Go to rarecoloreddiamonds.com, rarecoloreddiamonds.com, featured diamond of the week. You can see video of the diamond there. And we were talking about a shield and a shield diamond. And I remember one of our featured diamonds a while back was a yellow. And it was a yellow, and it was a shield. And Harold, you remember that diamond as well. I'm sure it was one of our featured diamonds, one of the best we have ever featured. And it was absolutely spectacular. Just amazing. And when you can find a piece like that, let's face it, it's like a Picasso. It's a one-off. It's nature's art. And people don't quite realize how hard and difficult it is to find diamonds to begin with. And then on top of it, you're looking at rare colored diamonds, naturally fancy colored diamonds, like pink diamonds in the Argyle mine. And then on top of it, there's the cutting and polishing process. You have to sit down and figure out, okay, how do we cut this? How do we polish this? How do we get the most out of this diamond? And that can take a year. On some of the most amazing big museum piece type diamonds, it can take a year to cut and polish. So Harold, when you take into account all the time and effort that goes into finding a diamond, and then ultimately how rare this diamond market is when it comes to Argyle pinks and naturally fancy colored diamonds, rare colored diamonds. It's the rarest of the rare. In fact, as you were saying, think about it. 65 diamonds for the entire world this year, 44.14 carats. We have a picture that we have featured in our newsletter in the past, and it was a story about the Argyle mine, and they had a champagne flute, and I think maybe a quarter of the champagne flute was filled with rare colored pink diamonds. That's right. That was the entire allotment for the whole world from the Argyle pink tender. And when you start putting that into perspective, something that you could hold in your hand for the entire world. We know, as Harold was touching on, the Argyle mine going away in approximately 4 or 5 years. You're dealing with the rarest of the rare. And Harold, we've told people about this for quite some time, but now is the time for action, especially around the Argyle pink tender, because it really awakens everyone's mind to the potential of investing in this market.
You better believe it, Randy. Again, this is an amazing opportunity, but again, when you hold one of these diamonds in your hand, you just won't believe what you're holding. I really and often say that I have the best job in the world because I get to play with these diamonds and touch them on a daily basis. I get diamonds presented to me all of the time, and again, very seldom do I buy diamonds from people outside of my circle. I represent a family out of South America that's been in the diamond business for 4 generations. We have over $500 million worth of some of the rarest diamonds in the world. So we have diamonds that start at 15,000. We have diamonds that go to 40 to 50 million. So we can accommodate anybody. Again, it's one of the most important assets. It's portable private wealth. And, most people didn't, put a lot of credence into that statement before. But just think of that if you were in Greece or in China or in Venezuela or in Iran or in Russia or in any of these countries that have sanctions against them, where their currencies have plummeted, where their inflation is through the roof, how important an asset like this is. If the people of Greece, if you had your money in the bank, you couldn't get any money for 2 weeks. If you had a diamond, you could go across the border, you could sell that diamond, whether you sold it for a profit or you just sold it for whatever, you now have cash. But you don't have cash in any other way because you can't get in the bank and you can't get to your money, and again, your money is being devalued. In Venezuela, as Randy mentioned at the beginning of the show, $1,000 bill is worth 16 cents. An iPhone in Venezuela costs $50,000 almost. A loaf of bread costs $200. That's what I'm talking about. When you own an asset like this, if God forbid something happens, and let's face it, most of us, looking at the world financial situation, it's too complex. We're smaller investors. How does that affect us? What do we do? You can do the best you can do. You can do what the people that have the big money are doing, but just do it on a smaller basis. If it works for them, it's certainly going to work for you. So that's why we bring this to you. The fact is we bring diamonds in the $15,000, $20,000, $30,000, $50,000 range. They're investment quality, so our clients can make 15, 20, 25% a year on some of these diamonds. In the case of Argyle pinks, I think my clients are going to make 2, 3, 4, 500, 1,000% return on their diamonds. But this will happen only that one time with pinks. So again, if you're in other markets, if you're in the stock market or other paper assets, and this market is going to fall again, take some of that money off the table, put it into a rare colored diamond, a pink, a yellow, a green, the featured diamond, whatever, and just sit back and let that market make money for you. Again, it's the best asset to be in at this particular time. Just look at gold and silver. The mines are saying that they don't have enough physical gold and silver in order to mint these coins, but the price of gold and silver is dropping. That's an impossibility in any market. When demand is high and supplies are low, the prices always go up. It's economics 101. But it's not happening in that market. It is happening in diamonds, though. The supplies are very low, and the prices are skyrocketing, and I want my clients in on that. So, again, that's what's happening, Randy. It's a really amazing time to be in the diamond business.
Thank you very much, Harold Siegel, for another great show.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. Call 1-800-432-1022 to speak with him personally and privately. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.